Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of February 23rd, 2015. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week was not good for Maryland mortgage rates. They did spike higher. If you take a look at the bond chart on the screen, you can see mortgage bonds have been selling off since late January. And they have a big red candle there on Monday, sold off, broke below that blue line of support, which is now resistance. So that moved mortgage rates higher. We tried to rally back, but we cannot move above that blue line. So we're going to recommend cautiously floating, because on Friday we did rally and stop right at the ceiling of resistance. So we're going to recommend cautiously floating to start the week to see if bonds can rally above that blue line of resistance. Now, if they get turned lower, we'll quickly switch to a locking stance because they could sell off and move rates higher short term. Now, long term, 60, 90 days out, we are looking for mortgage rates to move lower again. But short term, we've got a big, tough ceiling resistance to break through there. Now, in the economic news, we had a report on inflation come out for the wholesale level, the Producer Price Index. It was down 0.8% from January to February. So that's still showing inflation is very tame, almost non-existent. That's bond-friendly news. So that's good news to keep mortgage rates low for the rest of the year. Then we saw weekly initial jobless claims come out on Thursday. They dropped 21,000 to 283,000 claims for the week. Now that looks like a good report, but we're still not seeing the energy sector job loss showing up in the jobless claims or in the job report. We know we've been losing oil rig jobs, fracking jobs. $50 barrel oil cannot support the energy sector with all the jobs that were created. So if it stays there, we're going to keep losing more jobs. We're going to look for that to show up soon, and that should be bond-friendly news, which should help mortgage rates move lower again. Excuse me. Then we saw a couple reports on housing. January 2015 housing starts did fall 2% to 1.065 million units. The weakening housing starts were in part due to a big decline in starts for single-family homes. That decline is being attributed to high student loan costs and rising home price, which is pricing a lot of first-time homebuyers out of the market for new homes. But on a positive note, housing starts were up 19% year over year from January 2014. Then we saw builder permits come out as well last week, and they did decline as well to 1.056 million units. Now, building permits is a sign of future construction, so if that continues to decline, that could be foretelling a slowdown in new home construction as we go into the spring. So we'll have to keep an eye on that. And then the Home Builders Housing Market Index also dropped 2 points down to 55. That's a measure of home builder sentiment on new home construction. So it was at a high of 58. It's come down now, but anything above 50 says they're still feeling good about the housing market. So it's still a good report, even though it's dropping. And then other housing news, title insurance rates are going up March 1st. Two things, the title insurance is increasing about 18%, and then the closing protection letter is jumping up from $75 to $125. So housing closing costs are going up March 1st across the board. Now, USDA is working on, for those loan files, are working on files submitted 2/13 for Maryland. So plan accordingly. They're still running about 10 days to review files. So make sure you plan your closings accordingly. And then in the local news, the next first-time homebuyer seminar is Saturday, February 28th in Towson, Maryland, from 10 a.m. to noon at the Sheraton Baltimore North Hotel. You can register that event by giving us a call in the office, 410-412-3319, or register online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.